YouTubers! Mike Martin's here, Mike Martin's channel. Oh my god, I got some good news for you guys. Well, it's some hard-hitting news, actually, for you guys. Canadian lender CIBC sees profit growth hitting the wall. Share slide. They call it Canadian lender for internationals. Oh, it's just a lender. No, it's a bank. It's one of our big banks here. Canadian Imperial Bank of Commerce. The lender. No, it's a bank. And their stocks are sliding over here. Crypto and Currency is going to probably do a video and cover this on his channel. So don't forget to check out Crypto and Markets on YouTube. He's probably going to be covering this. I hope he does. Here it is right here. It's a dip. I've been watching this today. I've been watching TD, Toronto Dominion 2 today, and very interesting to see where things are going to be heading. So this is from Reuters. Canadian Imperial Bank of Commerce on Wednesday fell short of profit estimates for the third straight quarter, and said it expects zero earnings growth this year, sending its shares down nearly 4%. The fifth largest Canadian lender also said expenses could rise in 2019, but added net interest margins could grow. Okay. Weak loan growth and higher loan loss provisions hurt the bank's bottom line in the second quarter, ended April 30th, as the higher interest rates, which in the past had helped the bank earn more from loans, crimped borrowers' ability to make out loans. So, you know, the stress testing, all that stuff. So they're blaming everything but themselves by putting bad loans on the books and approving things they shouldn't be approving in the first place. I'm not saying CIBC is doing this. Everyone's doing this. We don't know what's happening. It's a very gray area in Canada when it comes to understanding these financial institutions and what are they accountable for. I know CIBC is provincially and federally got guidelines, not those private lenders where they're just provincially guided. This one is a big bank, so they got to play by the book, and, you know, so let's keep going here. The lender's shares were on track for their worst intraday performance in nearly 3 years, down 3.5% in midday trading. The stock has risen 10.3% since the beginning of the year, as of Tuesday close, outpacing 1.6% rise in the S&P and TSX Diversified Banks Index. The Bank of Canada has raised interest rates 5 times since July 2017, with the U.S. Federal Reserve has boosted rates over 6 times in the same period. CIBC's negligible loan growth was exuberated by a dip in home loans, which fell mostly due to stringent regulatory rules and require borrowers uninsured mortgages and stress tested to check out their ability to repay. But I think people should be stress tested regardless to make sure they could pay it back. Isn't that like a basic stuff? Isn't this stuff supposed to be in law since the time of Moses? Hey, if you can't pay this back, we can't lend you this money. But why weren't they doing this before? Financial regulators are now considering changing the terms of the stress test. A top banking regulator said in February, a decline in the domestic retail lending will likely raise additional questions to where the domestic growth will come from, said John, an analyst with Barclays. Net income at CIBC's retail banking business, a company's biggest, fell 2.4%, $570 million, $425.8 million from last year. Total provision for loan losses, or the money bank sets aside to cover unpaid loans, rose 20.3%, while total non-interest expenses jumped 2.82% to $2.59 billion, partially for personal costs. Now, hold on a sec, guys. You know how in New Zealand, they're issuing, the banks in Australia too, they're issuing banks to have a minimum reserve on reserve on hand to hedge against these bad loans or bad loans that are being on the books. So they're telling, okay, you don't have no money in reserve. You need to start putting money in reserve. You're a bank. But the problem is no one's depositing money in their banks anymore because everyone's just getting by to try to eat and pay rent. Okay, so total provisions for loan losses, money bank set aside, cover unpaid loans, rose 20.3%. Okay, I read that already. The market for quality people is tougher than it used to be due to the tight labor market, though the bank has not seen significant cost of inflation, a result that Kevin Glass, CIBC's chief financial officer, told Reuters. Getting quality people is a challenge, he added. The bank reported adjusted earnings per share $2.97, which missed analyst estimates of Canadian $2.99 according to Reinventi IBES data. Expenses for the remainder of the year are expected to remain high. Okay. So prices are going to go up on what? They're going to get wage increases, more wage increases. What's going to happen? We will continue investing in our business for the long term despite short-term pressure on revenue, Victor, Chief Executive Officer of CIBC, said in a conference call with Analysis. Capital markets were a bright spot in the bank's earnings. Net income from the business rose 12%, boosted by higher underwriting and advisory fees. Trading revenue rose closely 7%, helped by bonds and interest rates, although equity grew marginally. That's very important. Equity. Banks' equity. That's why banks need to have more in reserves. CIBC is among the first Canadian lenders to report quarterly results. Bigger rivals Royal Bank of Canada and Toronto Dominion Bank will report results on Thursday. And okay, there you go, guys. I want to throw this out there. It's by the Journal Pioneer. I'll leave a link below to the article if you want to read it yourself. Now, banks are not throwing any equity. They don't have liquidity, so they're not holding on any, like, they're this fractional lending and all this Mickey Mousing. And it's kind of our faults, too, because a lot of people aren't depositing money in their banks and saving it anymore because they need to eat. That's how bad it's gotten in the last decade. Back in the day, 10, 15 years ago, the bank will pay you 5-6% on your money until they artificially lowered interest rates, never humanly done before, and it's been crippling us, and we've created a new Frankenstein. And how do we destroy this monster? Simple. We need to push the reset button, and things need to reset. So they might be raising interest rates in Canada again, so we'll keep our finger on the pulse on that. Let me know what you guys think. Banks are on the slide right now. I saw TD stock today went down. And then I saw a couple other banks not looking too good right now. Let me know what you guys think in the comments below. And thank you for watching. If you want to support this transmission, share one of my videos. Thanks so much.